Hey everyone. Today we're diving into something that affects every business and consumer, whether you're buying, selling, or producing goods. We're talking about VAT, value added tax. What is it? Why do we pay it? And how does it impact both your business and your everyday purchases? Let's break it down. VAT is a tax that's added at each stage of a product's life, from production to the point of sale. Whether you're a manufacturer, a retailer, or a customer, VAT plays a role in the final price of the product. Here's how it works. Imagine you're a manufacturer. You buy raw materials to create your product. At this stage, you pay VAT on those materials. Let's say you paid $100 for materials, and the VAT rate is 20%. You'd pay $120 in total, with $20 being VAT. When you sell the finished product to a retailer, you charge VAT on the sale price. Suppose you sell the product for $200. You add 20% VAT, so the retailer pays you $240. You've collected $40 in VAT, but remember, you already paid $20 in VAT when buying the materials. You can deduct the $20 you paid from the $40 you collected, meaning you'll pay $20 to the government. The retailer, in turn, sells it to the customer, adding VAT again. If the retailer sells the product for $300, they add 20% VAT, making the total price $360. They collected $60 in VAT, but can deduct the $40 they paid to you, the manufacturer. So they'll pay $20 to the government. Each business can usually reclaim the VAT they've paid, which means the final VAT is mainly paid by the end consumer. Now, let's talk about selling abroad. If you're selling products to another country, VAT works differently. When you export goods to a country outside your own, you usually don't charge VAT on those sales. This is because the product is consumed in another country, and VAT will be charged by the destination country when the product is sold there. For example, if you're in the European Union and you sell goods to a customer in the United States, you don't add VAT to your invoice. However, if you're selling to another EU country, you might charge VAT, depending on whether the buyer is a business or an individual. If your customer is a business in another EU country and they provide a valid VAT number, you can sell the goods at zero VAT. The buyer will then account for VAT in their own country. But if your customer is an individual, you'll generally need to charge VAT at your local rate. This means if you're selling from Germany, for example, and your customer is in France, you would charge the German VAT rate on that sale. This is because the product is considered to be consumed in your country of origin, and so the local VAT applies. However, there's an important exception to this rule. If your sales to individuals in another EU country exceed a certain threshold, which can vary by country, you may be required to register for VAT in that country and charge their local VAT rate instead. This can add complexity to your business operations, as you'll need to keep track of multiple VAT registrations and rates. But on the positive side, this also means that the VAT you charge aligns more closely with your customers' local tax expectations. For businesses, this means keeping track of not just domestic sales, but also international ones. You need to know when to charge VAT, when you can zero rate your sales, and how to account for VAT on your returns. It's essential to stay on top of these rules to avoid penalties and ensure your business runs smoothly. And for consumers? Well, you're the one who ultimately pays the VAT. It's included in the price of almost everything you buy, from groceries to gadgets. But here's the catch. The VAT rate can vary depending on what you're buying and where you're buying it. In some countries, essential items like food and children's clothing might have a reduced VAT rate or even be VAT exempt. But for most goods and services, VAT is a significant part of the price. Why do we have VAT? It's a way for governments to collect revenue without directly taxing income. It's a broad-based tax that ensures everyone contributes, and it's one of the most common taxes in the world. Governments rely on VAT because it's relatively efficient to collect and provides a steady stream of income. So, whether you're running a business or just doing some shopping, understanding VAT can help you manage costs and make better financial decisions. And for entrepreneurs, staying on top of your VAT obligations is crucial for keeping your business compliant and avoiding any unexpected surprises. That's a quick overview of VAT. If you found this helpful, don't forget to like, share, and subscribe for more business tips and insights. See you next time.